Hi, I'm Lesley Barlow with Watson Realty, and I'm joined with Roger Tillis with Watson Mortgage. And Roger is going to talk about the 5 things that we should know about an FHA loan. FHA loan stands for the Federal Housing and Administration Loan. And, you know, one of the first things that we think about as realtors anyway is with an FHA loan that it might be applicable to somebody with a lower credit score.
Right.
Can you tell me what about the minimum credit scores and how that works?
Right, yeah, typically with your FHA loans, I mean, and it's not a bad thing, it's about tolerance. And what FHA has is an allowance of credit score as low as 580. Which, you know, when you get into your conventional realm, you know, you need to have those upper crust credit scores. So for those that may have had some issues with credit and it drops their score down to 580, you're putting down 3.5%, which is fantastic, as little as 3.5%. If you are below 580, I believe you can go as low as 500. You can still be approved. 10% down though is what you have to place. So there is a trade-off.
Right. So there are options for people who may have equity but have run into trouble with their credit.
Yeah, they could. I mean, I've seen individuals with a lot of cash assets. For whatever reason, their scores took a hit, and they just simply couldn't get qualified under the, under the conventional methods. You know, and it was a great pivot into the FHA.
Right.
Yeah.
Number 3.
MIP. That's the bad word. That's a bad word in conventional and FHA, but with FHA especially.
Right.
And it's one of those things. It's a necessary evil, whether it's conventional or whether it is for the FHA. The MIP, the more you've heard it as mortgage insurance or private mortgage insurance. Essentially, what it's doing is it's protecting the investor against default. So what they're saying is, client, if I'm going to finance more than what the standard mortgages are doing, then we're going to protect ourselves, because those types of loans traditionally, first and foremost, will default. If any are going to default,
right.
they're usually the ones that pop up. So they use this insurance to cover themselves in the event of that default. They get their money. I get it. It makes sense. It doesn't do anything for the client or the lender directly. Again, it protects the investor. Now, the thing is, the mortgage insurance traditionally is a little higher on your FHA loans than it is your conventional. It's also, and this is the big sticking point, it is also life of the loan. With FHA, let me be clear, the mortgage insurance that you're paying monthly, you will pay for the life of that loan.
But you can refinance.
You can refinance. If you get out of that original contract that
right.
has the mortgage insurance, and as long as you are financing 80% or less of its value, you can then get into a loan that has no mortgage insurance.
Right.
That is exactly correct.
Okay. Loan limits. So if I have a home that I'm thinking about purchasing, $600,000, and I meet these other parameters, am I gonna qualify for an FHA loan?
You can meet all parameters, but with FHA, unfortunately, if you start getting into that jumbo market, that's where you start falling out. You can't. FHA, matter of fact, it's county by county where they have their max limits. A good rule of thumb, just think almost like the conforming conventional type of limits. You can go to the county and you can look and see, how much, but usually the 400 to 500 range,
right.
and
well,
that's about it.
This is a good time to talk about pre-planning. And if somebody's thinking about a home purchase, whether it's 6 months, 12 months, maybe they should give you a call and plan that out so they know what product they qualify for,
Yes.
and if it's FHA, what those limits might be.
Yes, the pre-qualification is fantastic, because we're not just trying to see, how much house you can purchase. We're also looking, how you should be purchasing, what program. At that point, that's a great time to dictate whether or not we should go conventional or whether we need to go FHA, how long you're going to be in the house. All of these factors will kind of draw you into a different direction,
right.
and that's where we come in
right.
to really, do that and find
right.
what's best.
Now, the scary thing for some people is the FHA appraisal. Can you speak to that?
Yeah, sure can. The FHA appraisal, it's funny. You hear a lot of the negative comments when it comes to FHA, because the appraisal, it's harsher, it's more constraint, and it's really not. What it is with FHA appraisals as opposed to conventional appraisals are primarily about value, getting that value so we can make that loan. With FHA, they have an element of safety and health. They want to make sure that what is that this property is proper, if you will, for the client. So they're going to make sure that there's nothing, that is going to be detrimental to that client. Now, here's the thing. What I'm seeing is that your conventional appraisals, although they're not looking for certain things the way FHA does, they still discover them and they cite them. I've seen a conventional appraisal stop dead, or a loan stop dead because of that appraisal citing bad railing and things like that. So a lot of those types of things can still be caught unconventional. Right. It's just that FHA makes it very clear that we are looking for health and safety issues. That's not a bad thing. Sellers, I think, when they think of FHA, the sellers are thinking somebody who is going to have a struggle to qualify.
Right.
And that's a bit of a misnomer. Yes, now there could be an issue because maybe they have credit that is not as good. Well, here's the thing. We're not going to let them go down the path with an FHA loan to get to the closing table unless they qualify. Right. So it doesn't matter. We're still qualifying them. It's just a lot of hearsay and misnomers and some of the things from the past that don't apply now. But I think the appraisals are fine. I think the process is fine. The programs are fine. There are situations where an FHA actually is better than a conventional because they have really good interest rates compared to the conventional, at least in the market today.
Right, and that changes.
And that changes, right. And that's where it's up to us to look and break it down and decide which is the best path on the FHA.
Well, thank you
for you're welcome.
Talking to us about the 5 things that you should know about an FHA loan. I'm going to put your number here.
Excellent.
If anybody has any questions, give Roger a call. Thank you.
Give me a call. Thanks.